This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashirdes. Thanks for joining us at xm.com. Turkish President Recep Tayyip Erdogan responded to last week's bigger-than-expected rate hike by the country's central bank by ousting its governor, Najib, in a shock move late on Friday. The Cbrt hiked rates by a hefty 200 basis points on Thursday in a bid to bring inflation down to the single digits. But it didn't take long for Erdogan to reveal his ire at the decision. The Turkish Lira plummeted by more than 13% at today's market open, hitting a 4-month low and erasing the gains made under Obel's tenure. The yen firmed across the board, and although the dollar and franc were also firmer on Monday, their gains were moderate, and there was no sense of panic or spillover outside of Turkey. It was a similar story in equity markets where European shares opened in the red, but losses were contained. With a host of other factors dampening risk sentiment over the past week, the lira's plunge is probably not at the top of many investors' concerns right now. Many European countries are not only seeing a resurgence of COVID cases, but vaccinations across the EU continue to lag the UK and US. The latest set of curbs across Europe have dashed hopes of a major loosening of virus curbs in the spring. But more worryingly, the EU is still struggling to step up its vaccination campaign. On Wall Street, emini futures were indicating a flat open for the S&P 500, but extended gains for the Nasdaq Composite, which staged an impressive rebound on Friday. There was widespread relief among traders after the Federal Reserve said it will review its rule on the supplementary leverage ratio, which requires U.S. banks to hold extra capital against Treasuries and central bank deposits. But the announcement of the review seems to have calmed investors, and the 10-year Treasury yield has fallen back below 1.70% today. This limited the dollar's advances as the euro managed to climb off earlier lows to stand marginally lower versus the dollar at just below the $1.19 level. The pound also recovered from its lows, though Brexit frictions continue to linger in the background as the vaccine row with the EU has added to existing tensions over the Northern Ireland Protocol. This was today's Daily Market Comment. Thanks for joining us at xm.com.